New inflation data for the month of October revealed a relatively tame headline rate of 2.2%, primarily driven by lower prices for gas and groceries. Let's go to Pedro Antunes. He's chief economist at the Conference Board of Canada. He joined us now to talk some more about this. Thanks for your time today.
It's a pleasure, Marilla. Thanks for having me.
So lower gas prices and some groceries. We won't say all groceries because some trended up, some trended down. What else led to the drop?
And interestingly, I think we're seeing how home ownership costs in general down. I still think that there's a lot of pressure on renters, for example, because we're still seeing the rent component of that increasing at a pretty good tick. But overall, inflation, 2.2%, it's really the gasoline prices. And again, this goes back to that reduction in the carbon tax that we've talked about before, that is really taking about 0.7, on average, about 0.7 percentage points out of inflation. So it's good for certainly households that purchase gasoline. But for everyone else, inflation is still, running at about a 3% pace.
Okay, there was an increase in cell service costs. What led to that?
Actually, there was no explanation. What we do know is that cell costs have been coming down steadily since 2023, essentially. So overall, we're still down about 20% in cell phone costs from essentially 2 years ago. But in the latest month, we saw an uptick. So perhaps that signals a change in trend here. Who knows? Let's see.
Okay. The StatCan also reported on property taxes. What did they find?
It's interesting. Property taxes are running pretty high. 5 or 6% for most provinces, and a few provinces have, I guess, put in new property taxes, which is pushing inflation up in those provinces more than others. Manitoba is the standout there in the latest month. So all of these things obviously adding again to that underlying inflation number.
Okay, so 2.2% is the headline number. We know the Bank of Canada looked at core inflation. Are there still concerns there?
I think the concern now really is more so on, how big a hit to the economy we might still have. We had a second quarter steep decline. The third quarter, Statistics Canada is giving us numbers that mean essentially telling us the third quarter is flat at best. So we're on the edge of a recession here. I think if things do start to get worse, the Bank of Canada may move, just because this kind of weak economy doesn't signal much for inflationary pressures. But if we hold steady, if growth ticks up a little bit in the fourth quarter, perhaps I think we'll see the bank holding steady on rates unless there's something dramatic that happens here.
Are we safely through, I will say, most of the effects of tariffs at this time, or should consumers expect more unwinding through the end of the year? What do you think?
Yeah, I don't think we're safely through yet. I think there's still a lot of, essentially holding back of investment and of job creation because firms really don't know what's coming. We absolutely need some sort of certainty here. We need a trade deal. CUSMA renegotiation is coming up next year, but we need something to be, to signal that there's going to be some stability here going forward. Very, very uncertain environment for many companies here, many businesses in Canada.
But do you feel if most of the costs have been passed through for the average Canadian? We know some of the retailers, for example, were saying they would pay the costs at the start of the year, sort of eat up as much as they could, and then perhaps later in the year start passing them through. But that being said, we're also coming into the Christmas season when maybe they don't want to pass those higher costs on because they know consumers are already a little worried.
Well, I mean, Canada has essentially declined to use the counter tariff measures on the U.S. So, yes, I think because the supply chains are so intricately tied that for a lot of products that go back and forth across the borders, we are still going to see the effects of tariffs as we re-import products from the U.S. And of course, inflation is high in the U.S. because they are applying tariffs more broadly to many other countries. So the fact that we're so closely integrated into the U.S. economy and the fact that there are inflationary pressures south of the border on their own will have an impact here in Canada. So, yeah, I think those underlying inflationary numbers, this kind of deglobalization effect, if you'd like, most prominent here in North America, this is going to continue to to add to that underlying inflation number, which, as I pointed out, is still running at about 3%. It's going to be difficult to get inflation back down to that 2% range that we've had in the prior 30 years with much success. I think the challenges are yet to come.
That's because I guess the power doesn't really sit with us. It sits with the U.S. in many of the circumstances. Okay, let's factor in the budget and the government spending outlined for that budget into next year. Do you think that will bring upside with that money being spent and perhaps jobs being created, some wealth being created there? Do you think that that is something we can bank on for 2026, or is it too early to tell?
No, it's a big budget. I mean, assuming the spending goes through, there are cuts, of course, to government departments, and if we net those out, we still end up with a boost of about $30 billion in the late this year and into next year. So let's talk about the calendar year 2026. If those measures and those budget measures come through, $30 billion, we're talking about close to 1% of GDP. So that definitely should add some stimulus into next year.
And enough to sort of keep us from recession. You mentioned perhaps we are at that precarious point.
Yeah, it's a tough call to make, but we haven't factored in the budget yet. We will do that in our next forecast. But on its own, we were hopeful to get some sort of stability. As I mentioned earlier, it's perhaps more of a prayer than a fact, but we're hopeful to get some certainty on CUSMA and on the tariffs that we're going to face, and and in essence, we were expecting to see a rebound in our trade into next year. So much like the Bank of Canada and some other forecasts that are out there, we're looking for a little stronger growth, maybe 1%, not really a rebound from essentially the hit that we've taken already this year, but just a little bit better performance, hopefully on the trade side.
Got it. Pedro Antunes is the Chief Economist, Conference Board of Canada. Thank you, sir, for your time. Appreciate it.